Okay, we're now recording. So, Gina,
Okay.
hand over
Oh,
to you.
lovely. Thank you so much, Rob. Hello, Ivona. Ivona.
Yeah, I think it was correct.
Yeah. Oh, lovely. Well, thank you for joining today. It's lovely to know that you're there. So my name's Gina Stanton, and I'm a consultant solicitor at Johnson and Boon, and I take care of anything to do with inheritance at Johnson and Boon. So I help people to put their wills, trusts, powers of attorney, their general inheritance plan in place, and I also help people after someone's passed away to get their family members' affairs in order. And so what I'm going to talk about today is some knowledge that's useful for landlords such as yourself, when it comes to thinking ahead about, well, what happens after my lifetime to my portfolio. A sort of a short guided tour through the very exciting world of probate and administering your estate, if something happens to you. And it is something that's very important for you to think about, because obviously huge responsibilities as a landlord in many respects. Now, the first step that I want to just talk about really is just give you a quick overview of the overall process of putting your affairs in order after you've passed away. And it's kind of a three-step process initially. When somebody passes away, the first and most important step is to work out who's actually responsible for putting their affairs in order, who's legally holding this responsibility. Now, this is very easy to identify if you have a will in place, less so if you don't have a will. Then the next most important thing is to actually work out what you've left behind. That's called your estate. Your overall assets is your gross estate, and your assets after your liabilities, your debts, bills, etc., have been taken into account is your net estate. And then this is where the real heavy lifting begins from a kind of a legal and accounting standpoint, is actually working out the value of your net estate, dealing with inheritance tax, which is often a major issue for landlords who hold property that quickly builds up in value. And because as a landlord, your estate after you've passed away, it by definition includes property, it will be necessary to apply for a legal document that's called a grant. It's a grant of probate if you've left a will, and it's a grant of letters of administration if you didn't have a will at the time of your passing, and you're what's called intestate. Once your representatives have handled those basic fundamental steps, they can then move on to the important process of collecting in your assets, settling any debts, and either selling your portfolio or transferring the properties in your portfolio, perhaps in accordance with the instructions in your will, distributing your estate, hopefully in the way that you've controlled by putting your will in place. Now, this is universal, really, for anybody who's passed away, particularly if they hold major assets such as significant savings or property. But when you're a landlord, you have to think strategically. You have to think differently to other asset holders, really, because your rental portfolio, it's not just a passive asset like money in the building society. It's an ongoing responsibility that you have kind of, operating duties to deal with on a day-to-day basis, that fall into the categories that I've looked at, that I've mentioned on the screen there. There's one category very important, which is your tenants. They're bringing in the rent to you, but they're entitled to have the repairs that's necessary to the property that they're occupying. Obviously, they need somebody that they can liaise with to gain access to the property. Their deposit on the rent needs to be safeguarded, and they always need to have a point of contact, and that continues whether you're still around or whether you've passed away. Very, very importantly, if you're a property investor, many property investors obviously use mortgage funding to acquire their properties. Well, the mortgage repayments are not going to stop just because you've passed away. There is a caveat to that. Many mortgage companies will, as a matter of policy, give a 1-year period of grace for the affairs to be put in order first. But that's not universal. It's not a required rule by any means. And even when lenders do provide that facility, once the year is up, they want their money and they want it fast, basically. You'll be very aware as a landlord of your compliance duties, the need to keep the property properly insured, your obligations imposed on you by the local authority with regard to the safety of the property, and of course, you know, the tax obligations that require you really to have neat and tidy and accessible records. As with every business, and I do regard a property portfolio as an active business, as a business enterprise that's deriving profits, cash flow is king. And of course, the rent may well continue to come in if your tenants are paying by way of direct debits or standing orders, but of course the bills are going to keep coming in as well and will require servicing, and none of that stops. And of course, the major thing is that if you were to pass away, that is a huge transitional point that requires some big and serious decisions to be made by people representing you. They're going to need to think about whether they're supposed to sell the properties, hang on to them and keep managing them. Do they need to obtain new finance? You know, apologies for Maggie, my office assistant here. She gets a little bit fruity sometimes. I think we've got a window cleaner this morning that's excited her a little bit, but she'll shut up in a second. I often see landlords, representatives having to refinance properties in somebody's estate because a mortgage company won't necessarily, just as a matter of course, accept the person who's inherited the property as their new customer. So there's all kinds of things that need to be thought about and acted upon, and somebody's got to have the legal authority to make those important decisions and take those responsibilities. Now, a very, very important distinction is whether you do or don't have a will at the date of your death. And this is crucial to how your portfolio would be managed in the event of your passing. If you've got a will, then it's the executors who have been named in your will that carry the responsibilities, that carry the power and the responsibility to make all these big decisions and take all these huge actions. So obviously making a will is or updating a will is an opportunity for you to seriously control this and think deeply about who would be appropriate to take on this responsibility on behalf of your estate if something were to happen to you. If you didn't have a will, then it's the rules surrounding intestacy that apply. On the back of an envelope, that tends to be, it's your next of kin, your nearest blood relative, who is going to be saddled with the responsibility of managing your portfolio in the immediate aftermath of your passing. But that in itself can carry complications. The rules are not that straightforward. There's all sorts of the stuff about when it's your spouse, whether your spouse and your children have to act together. If you don't have a spouse or children, who then takes on that responsibility? There's odd, old-fashioned rules about this. So it's on the face of it a little bit of a mystery in a way initially as to who's going to carry that responsibility. It's going to have to be a little bit of inquiring done to actually identify who that next of kin is in your estate in the absence of a will. So I suppose the first tip I would have for you is don't leave yourself flying blind, really. Take control of this early on by making sure that your will is in place, or if you've got one, that it's up to date and the right personnel are in place to carry these responsibilities. So, as we said, we've got to establish who's got the authority to carry out these responsibilities, but then these responsibilities come sequentially, really. Straight away after you've passed away, it's your representative's job, your executor or your next of kin's job to just secure and safeguard your portfolio, to make sure that they've basically steadied the ship, that they know what needs doing, and they're kind of taking over from you, at least in the interim, so things don't, you know, drift out of control. Once that is done, very quickly thereafter, they're going to have to gather up-to-date, accurate information about the overall value of your estate and the overall total of any liabilities that apply to your estate. So it might involve working out what savings you have, how much your home is worth, what investments you may have, and of course valuing your property portfolio as a whole, and also working out what your debts and your mortgages and other bills are. Importantly then, all of this information will often have to be declared to the tax authorities. The vast majority of landlords find that they fall into the bracket of paying inheritance tax, or even if they're not paying inheritance tax, they still have to report the assets and liabilities to HMRC, and this has to be done very early on in the process. Once that is taken care of and that any outstanding tax has been paid, then your representatives can move on to a very important stage, which is applying for a grant. And this is a legal document that gives your representatives the legal power to handle the assets that you've left behind. It's their formal authority to act, and it's compulsory if your estate includes properties. Once a grant has been issued, then they can move on to the administration phase, making sure any liabilities are dealt with and paid off, and then distributing the assets either as you've specified in the will or as the rules of intestacy dictate. So the important thing is to hold at the front of your mind is protect the assets first, and then get the legal authority to handle the assets, and then go ahead and carry out the relevant transactions once that authority is in place. So what does actually happen to your rental properties in the event of your passing? It falls into 4 categories, and what's going to happen is different. It varies from estate to estate. There's no specific right answer. It's driven by the individual circumstances of that person who's passed away, and what instructions they may have left, and what assets and liabilities they've left behind. But the 4 basic options, and it can be a combination of these, one or more of any of these, is your representatives can keep the assets, so they can retain control of the assets if necessary and continue to manage that portfolio on behalf of the estate, and obviously use the benefit of it for the beneficiaries of your estate. They may transfer the assets to the beneficiaries of your estate, the people that are going to inherit from you. So there would be a land registry transaction saying the new owner of this property is this person. They may need to sell properties, either to raise cash to perhaps pay taxes or other liabilities, or indeed to be able to give the inheritance that you've said in the required proportions as well, you know. And in certain circumstances, particularly where tax and other issues are a concern, and also where there's a mortgage company that's not just going to fall into line and go, oh yes, of course, the people who've inherited can just be our new customer. In either of those situations, it may be necessary to apply for new mortgages to replace one if the existing one is no longer fit for purpose as a result of you having passed away. So it all depends on the individual circumstances, and it's up to your representatives, your executors, or the administrators of your estate in next of kin to decide how to do this according to what your instructions are and to the individual circumstances of your estate. The massive thing to bear in mind is that none of your mortgages will die with you if you pass away as the landlord. The mortgage debt is a liability of the estate, and the monthly repayments continue unless, of course, the lender has exercised their discretion to give a 1-year grace period. More often than not, however, with buy-to-let, it's all to do with the mortgage repayments are dependent on the rent coming in, and the fact that you've passed away doesn't stop the rent coming in, and therefore the mortgage lender will expect the payments to continue. The executors are going to have to make sure that that rent is coming in, that the mortgage is the mortgage payments are going out and that any other expenses are being serviced during this administration period, then they've got to think deeply and make the right decision about what they're going to do about each property in your portfolio. Are they going to continue to manage it? Are they going to pass ownership on to a beneficiary of your estate? Are they going to sell, or are they going to have to obtain new mortgage funding? Once that decision has been made, the mortgage company will be sorted out effectively. Either the mortgage will have been paid off entirely, maybe out of the proceeds of sale of a property, or a new mortgage lender will have been brought on board as a result of a remortgage if necessary. Your executor or your next of kin will have the power to enact that, and it depends entirely on the circumstances as to what they will end up doing. Inheritance tax, huge issue for property portfolio owners, really. Inheritance tax, the base rate of inheritance tax is 40%. That sounds massive if you've got, if you're talking about the market value of your properties. The starting point is the open market value of each of the properties at the date that you've passed away. But from that, they can deduct qualifying debts and liabilities. So the mortgage obviously is a headline point. So you don't need to think necessarily of the overall market value of your portfolio. It's the equity in the portfolio after mortgage redemption figures are taken into account. And then any other liabilities, such as ongoing short-term debts that have to be paid off, or the cost of funeral, legal expenses, other things like that, are taken into account as well, of course. And when it comes to inheritance tax, everybody has allowances against the overall value of their net estate before that 40% begins to bite. So there's the nil rate band, which is what everybody gets. Every individual person, their first 325,000 is inheritance tax free, which can often sound like absolute chicken feed against the very large value of a multi-property portfolio. If somebody has passed away as a widow or a widower, and their late spouse hadn't used any of their own inheritance tax allowances, then those unused allowances can be brought onto your estate and offset against your inheritance tax liability. And when it comes to your home that you occupy, there is a small additional allowance that you can apply against that, which is up to 175,000 for yourself, and also in respect of your late spouse if you happen to be a widow or a widower at the date of your death. So the first minimum of 325,000 can be offset against your net estate. And if you're a couple with a home that you intend to leave to your children and it's the second of your deaths, then the allowance can be as much as 1 million, but anything over that allowance is taxed at 40%. The practical question really for most landlords is, well, where's this money going to come from, basically, because a property portfolio is often a very asset rich but cash poor asset. There's not often a large amount of cash flowing around. There will be assets, of course. There's the value of the properties, there's the value of the home, there's the value of savings and investments and that kind of thing. But offset against that is that requirement for cash to meet inheritance tax bills, to discharge any mortgage liabilities, and of course to meet estate administration costs. So executors may find that they need access to cash fairly early on. There is a very useful exception when it comes to paying inheritance tax that is often used if somebody's passed away owning a property portfolio. The default position is that inheritance tax must be paid by the end of the 6th month after the date of the death. But where an estate includes property, so obviously it goes without saying that portfolio estate includes property, the inheritance tax that applies to that real estate, to that property, including the portfolio, can be paid in 10 equal installments. And so that makes life a bit easier for your executors, because it often means that all they have to do by the end of the first 6 months is find the first 10% of what can sometimes be quite a substantial liability. Once at least that first 10% is paid, that's when the HMRC will give your executors the permission to go ahead and get that crucial grant of probate, which is what then opens the door to your executors being able to sell or remortgage as necessary to raise the rest of the money they may need to pay the remainder of the inheritance tax liability, if applicable. So quite complicated and can be quite stressful in those early months, really. How are we going to go about satisfying this inheritance tax liability, and how large is it, basically, you know? Think of probate and the administration of your estate as kind of a 5-part journey that your representatives, your next of kin, your executors are going to have to follow. It's a very simple, straightforward journey for a lot of people who pass away with a house and a little bit of money in the building society. It's rather more complicated if the person who's passed away is a landlord with a property portfolio. And hence this kind of 5-part journey, which begins with obviously securing the assets, making sure that the properties are safe and safeguarded, that they're insured, that all the documentation has been collected in that's going to need to be referred to. Stage 2 then is establishing the value, as I mentioned, both gross and net. Then stage 3 is getting that legal authority to administer those assets, getting that grant. And like I say, if you've left a will, it's your executors who'll be applying for a grant of probate. If you haven't left a will, it's whoever's been identified as your next of kin who'll be applying for a grant of letters of administration. 2 documents with different names that perform exactly the same function, which is give your representatives the authority to handle your assets. And move on to stage 4 of the journey, which is administering your estate, which is collecting in any liquid assets, paying off any debts, maybe selling assets such as properties within the portfolio, or transferring properties to beneficiaries of your estate. And then finally bringing it all together with a full account of what was identified as the assets of your estate, what was paid off as the liabilities of your estate, what was distributed as specific gifts that you may have listed in your will. I give this amount of money to this person or that charity, I give this item to that person, that kind of thing, you know. And therefore, what was left behind, what is the residue, and how is that calculated, and who's receiving it? Is one person receiving the entirety of the residue, or is it being shared out equally between multiple people, or in differing percentages between people? So there should be a proper coherent account that can show at a glance exactly what your estate comprised of and how it was distributed. And that then would bring the journey to its conclusion. Although obviously, you know, what a journey, and what a responsibility these executors, these representatives are going to have to undergo on your behalf. Here are some things that will commonly slow your executor or your administrator down and make the process of putting your affairs in order that bit more complicated or a little bit more difficult. Missing paperwork, oh goodness me, it's the bane of my life. The crucial thing is, if you've made a will, the only document that is going to be acceptable to the relevant authorities is the original will bearing your wet signature. So that document will have to be, at the right moment, submitted to the probate authorities to apply for that crucial grant that I mentioned earlier. They will only routinely accept the original. If the original is missing and only a copy is available, it's presumed that you revoked your will by destroying it, and so your executors would have to provide evidence to prove the contrary if they could. And if they can't prove it, it's not a valid will anymore. So making and properly safeguarding your will, and importantly telling your executors where to find it if something happens to you, is key, and one of the most fundamental things that you must do really in beginning the process of fulfilling your responsibilities as a landlord in terms of what would happen if you passed away. Of course, yes, identifying the executors, absolutely essential, which is why a will is such a valuable document, because like I say, in the absence of a will, it's a case of trying to work out who then is the next of kin according to these intestacy rules, which can be a whole saga in itself. Poor record keeping is a major issue that I find when I'm helping people to put the affairs of a landlord into order. So it's very, very difficult to reconstruct the composition of somebody's estate if you haven't got clear written records down. You know, if we don't have bank statements or a list of where monies are held, we don't know who the accountant is, we don't know what properties are held, we don't know who the mortgage companies are, all that kind of stuff. So a clean schedule of your properties, the mortgage lenders, the amounts that are outstanding on the mortgages, how much rent is paid monthly, you know, proper accounts basically, you know, showing also what liabilities, you know, income tax and other things like that, insurance, you know, who's which insurance company is covering bricks and mortar, that sort of stuff, all essential stuff that it's a real headache to try and reconstruct out of a house full of random documents. I see it all the time. It slows me down massively and it adds massively to the bill. So the greatest favor you can do for your executors is keep clean, clearly understandable records about your portfolio. Tax complexity, yeah, that can cause some difficulty and a need for additional technical help. You know, sometimes I need to scratch my head a little bit more. Sometimes an accountant needs to come in and help out, particularly if rather more complex arrangements have been made during your lifetime. If you've transferred assets away in the final 7 years of your life, that's relevant to your inheritance tax bill. If you have transferred properties or other assets into a trust during your lifetime, that can be very relevant and has to be accounted for. The type of business structure that you've used is essential as well, because it determines what your executors are going to do. You might own your portfolio solely as a sole trader with all the properties in your name. You might own the properties as a partnership where two or more of you are registered on the title register to each property as the owners. You might own the properties jointly with your spouse or partner, or you might own your portfolio as a limited company. And in that case, that's a weird situation where there's a bit of a chain. What your estate owns is your shares in the company, and it's the company that in turn owns the properties. So the value of your share is determined overall, of your shares rather, are determined overall by the overall value of your portfolio divided by the number of shares. So it can get quite complicated, and then what the underlying consequences of that from a tax perspective can be an extra layer of complication. Property issues, major problem as well that often has to be overcome or clarified. You know, are all the properties registered with the land registry? If you're a relatively recent acquirer of your properties, say within the last 30 years, then the likelihood is that your ownership will be clearly registered with the land registry. Not always the case. I still come across properties that are unregistered where the evidence of ownership is a packet of old-fashioned deeds. That's a whole saga. If you own a property jointly rather than in common with someone, that's very important as well, because that might mean that it's not part of your estate, that it automatically, irrespective of what your will says or of the rules of intestacy, that property, if it's joint, has automatically gone to your surviving co-owner. The mortgage company might have very specific requirements and restrictions that they want to impose, which again, we might need to work through. Leasehold properties, a whole can of worms, you know, so there are lots of complications with regard to property ownership that might need to be unpicked and clarified in order that the administration of your estate can proceed cleanly. And let's not ignore the constantly arising problem of family disagreement. Sadly, in my line of work, I'm often seeing family members, siblings, even parents and children disagreeing strongly about what should happen to someone's estate, and that can cause a lot of bitterness and a lot of anger, particularly at a time when people are going through bereavement and they're just not themselves, perhaps aren't as tactful as they normally are. It can be a bit of a powder keg. So you will find that sometimes just, shall we keep this property or sell it, you know, that in itself can just spiral out of control into a big family argument. So it's very important to just try and control that as far as possible by being as clear as possible in your will. So in order to make things as easy as possible for the future, there are some kind of low effort actions that you can take as a landlord to safeguard your portfolio for the future and for the people that you want to inherit from you, without having to go to a huge amount of expense. But these small efforts will pay dividends in the long term and make your family's life and your executor's life so much easier. As you've probably guessed from what I've been saying so far, the number one priority is make your will or bring your will up to date. And the essential thing is who's going to be responsible, who's you going to name as an executor, somebody who knows what they're doing, somebody who's got a clue and can competently take over from you in the short term to make sure that everything remains steady and that there's continuity during this transition. And also that you've been very clear about how you want your estate to be left. And it's the way that a will is constructed can be very, very bespoke. You can go into as much or as little detail as you want as to how you want things to be left, and what control should remain in place, and what protections you want to put in place for, say, your spouse or for your children, or whatever your individual family circumstances or otherwise are. As I mentioned earlier, a clean schedule of what is comprised in your portfolio is absolute gold. It can just be a spreadsheet, really, you know, and hopefully you'll have a printed version of it somewhere, but that schedule should say the address of the property, the title number at the land registry if possible, the name of the mortgage company and the account number, who you use as a letting agent, if that's what you do, if you do go through a letting agent, which insurance company is currently on cover for the bricks and mortar, and of course the crucial details of the current tenancy, you know, when it started, how long it lasts, who the tenant is, how much rent is liable to be paid on what date at what intervals. That needs to be front and center because that's the roadmap for your executors. Keeping your key documents in a place that's readily accessible. I earlier mentioned how absolutely crucial it is that your executors can quickly and easily lay their hands on the original will bearing your wet signature. If properties are unregistered, then you'll have the deeds to the property in your possession or in the possession of the bank or something like that. So where those deeds are located is essential. Less of an issue if the properties are registered, which the majority of properties are now. The title number is often enough. Insurance policies, or the policy schedule, so we can see the extent of any cover, details of any loans and mortgages, correspondence with the mortgage company, and the all-important HMRC records as well, so that your executors are up to date with what your obligations are to the tax authorities. From your own point of view, it's a good idea to just have a really good overview in your own mind and to review and bring yourself up to date as to how your properties are owned and what your kind of borrowing situation is. Be clear in your own mind as to whether your properties are owned by a limited company in which you own shares, whether they're owned exclusively by you. If the ownership is shared with somebody else, such as your business partner or your spouse or other half, what type of shared ownership is it? So it might be ownership in common, where you all have your own defined shares in a property, like shares in a company, or it might be joint ownership, which basically means that if one of you died, the surviving owners absorb your share and continue to own the property between themselves, irrespective of what your estate says, what your will says, etc. And obviously, once you've done all that homework, telling your nominated executors what you've done and where you've kept all of your records, where the all-important file is going to be, the crucial final thing to do. Once you've done those 5 things, you've taken things as far as you need to. It doesn't need to take all your time. It doesn't need to cost you thousands and thousands of pounds. But if you can hit those 5 criteria, you've done your family and your executors a massive favour. And what it boils down to really is one key question that you can ask yourself, okay? And that question, I've put it on the screen here, is if I was to die tonight, if I got run over by a bus on my way home tonight, tomorrow morning, could the person that's stepping in be able to easily work out what I own, what I owe, who needs paying, and what I want to happen next? And if it's not yes, 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 absolutely no problem at all, I know exactly and I'm fine, I'm confident, then that is an opportunity for you to bring your plan up to date, or to initiate the process of putting your plan in place. And it starts really with making your will, so that you've got that roadmap in place for your executors, and you know exactly what your plans are for who should follow on from you as far as your portfolio is concerned, who should benefit from that portfolio after you've passed away. So in summary, just a quick sort of overview of the things that we've talked about today, the different stages and the different points that I'd like you to just carry away in your mind today. Authority, who is going to be responsible for putting your affairs in order? Control that. Make your will, name your executor, give them the legal power to act on your behalf in the event of your passing. Make sure that you've got clear information gathered in the right place and that your executors know where it is. Liquidity is going to be a challenge, always is, so you can bring that challenge under control by just getting a bit of advice as to what your inheritance tax position is, how that can be addressed. There's all manner of inheritance tax mitigation strategies that you can consider, and there's also ways of just structuring your estate and your assets in a way just to make it as easy as possible to meet that liability if necessary, and of course making sure that you've got the cash flow running smoothly and that running costs can be managed out of the rent that's coming in. And of course, more important than anything else is your decision from the heart as to succession. Who do you want to pass this valuable asset that you've created? Who do you want to pass it on to? And in what way? How do you want that to be structured so that it's at its most advantageous and least troublesome for those people that you want to benefit? And so to round that off, obviously I've given you a load of new information today. Rob has a little printed handout that he'll be able to share with you to take away, just to kind of refresh your memory about things. But it could be that you've got questions, you've got concerns. So I've included my contact details there on this final stage, on this final page of the slideshow here. I'm always available. Okay. Questions, there's no such thing as a silly question, and I welcome questions. I'm always very pleased to hear from people who want to understand something about inheritance and about probate, and it is a very great pleasure for me to be able to give people clarity and peace of mind and answer their questions. So please feel free to drop me an email, ask me your question. I might have the answer for you straight away, or if not, it might be that we need to have a little bit of a chat so that we can just explore things in a little bit more depth. That's free of charge. That it costs you nothing to find out where you stand and what your options are. and you can meet with me either over at the office in Upton. I meet with clients every Wednesday without fail, regular as clockwork, in person, and throughout the rest of the week I'm also available on video call just like this. So you don't even have to leave your own desk to have a chat with me if that's what you'd like to do. So that's it from me for this morning. Thank you so much, Ivona, for listening. And as I say, please feel free to get in touch if there's anything from this that just raises a question for you.
Perfect. Thank you, Gina. Thank you. It was a very, very valuable session.
Oh, you're welcome.
It just opened people's eyes again. There's things that we do, and we always, as agents, we do deal with most people at the best times when people are expanding or growing or changing or moving premises, whether it's residential or commercial. But there are times we have to get involved when it's not such a good situation. So it's a good reminder. There's times that we do have to get involved and, value estates and look at dismantling portfolios and selling them when the worst happens in somebody's life. So it's a good example, and it was a good reminder, and there was some really good information there. The presentation is already in our shared folders, so I put that in earlier this week, so that's there for everybody. And this session, as we always do, is recorded and will be added to EXP University in the next couple of days, so it's there for anyone that missed it first time round. But thank you again, Gina, really appreciated the session.
Oh, thank you, it was a privilege. Thank you again.
No worries, thank you. I'll see you soon.
Oh, thank you. Bye bye now. Enjoy the rest of your day, everyone.
And you. Bye.